We had a wild week last week. The wild day today. I think it's going as expected. I think the tariffs are really neither here nor there, even though it's all anybody can talk about. A little bit of that is just myopia and sorry, 1 second. You guys distract me. So I'm going to just start with some general comments, and then we can go look at some stocks. I didn't miss the crazy morning. I was on Godel. There's a lot of things to think about here. Obviously, we haven't had a real trade war in forever. I think that there is this question about whether the deficit rubber would have to hit the road. And I think, that rubber is hitting pretty clearly. So ultimately, one of the ways to think about a $27 trillion deficit is in a confiscatory way, which obviously I don't think anybody wants to think about it that way. But let's say you had a $27 trillion deficit and you wanted to solve that because every year it seems to be going up. And there's no way to solve it through politics as usual. There's entitlements that are hard to break. There's tax revenue that's hard to increase. It's already fairly high. How do we solve this problem? Well, we have these unilateral tariffs that are placed on us, but we don't really have them on others. Although, regardless of what the real story is, we still need to close that $27 trillion gap. So one of the ways that you could do that is to look at all the assets in the world, which is probably pretty good common ground to start from. If you start with that, you can work your way backwards. So there's only $400 trillion of wealth, period. Okay? So there's 27 trillion we need and 400, period. Now we could grow into that somehow, but confiscating the assets is a little simpler. And if you think about that $400 trillion of assets, how much of it do we own and how much of it do we sort of have auspices over? I think we own, or household wealth is around 100 trillion, and the auspices probably cast a shadow. The U.S. sort of cast a shadow over, another 100 or 200 trillion. So the theory is, let's say the number's 300 trillion. We basically have to take 10% of that and pay off the deficit with it. And the way you can take it is you can do it in a wild, aggressive, hostile way, which nobody wants to see. You could raise taxes, dramatically, or you could just simply, tariff. And I think that was the solution that was chosen to solve the fiscal problems of the country. And so if we tariff that $300 trillion base of assets that we have sort of control over, we can roughly, get a sense for, doing that, say, 1% a year for 10 years, and our deficit would be closed, assuming we can get to budget neutrality in the meantime. So that's sort of one way to do it. Another way to do it is to grow your way out of it. If the 400 trillion is growing, you can... tariffs are, basically a form of tax. So there's only two ways out of it, which is lower your spending or raise your revenue. And tariffs is just sort of a modified form of taxation. Instead of taxing income, you're taxing sort of trade. But in any event, the other way is to grow the base. If we go from 400 trillion to 800 trillion, sort of half your problem is solved that way. And I feel like one way to do that is through AI. Another way is through all kinds of other things, just simply growth. And politicians of the past have been willing to borrow from the future and trust that growth is going to outstrip that deficit. Some of the swamp creatures I know, some of the deep state people that I have had the pleasure of being friends with, their goal is just to make sure that the rate of borrowing is outstripped by the rate of growth, and that eventually those two will cross, and that the spending that we take is an investment in essence on an investment in our people, like things like healthcare, entitlements like that, are in essence investments in future growth. That hasn't really played out that well. Growth seems to be driven by people like Elon Musk and Sam Altman more than it seems to be triggered by the average person being a little healthier through Medicare and Medicaid. So in any event, that's sort of what I think is going on there. I don't think it matters that much for U.S. equities. And you might say, Martin, well, everyone's talking about it. How could it not matter? Or are you stupid? And I'd say, no, you're stupid. The basic premise here is that if you arrange a bunch of plywood, dry wood, I'm not an expert in forestry, but something very combustible, and you put it on the floor and you say, well, there's matches here, there's gasoline there, there's friction over here, and you're surprised that a fire starts. You shouldn't be surprised. The reality is that the market, after being up 20% in 2 years in a row, which is, roughly 40%, there's sort of a bunch of dry, combustible wood there ready for a fire. And anyone striking a match will set ablaze, a very big conflagration. And so, the tariffs did that, and there's no doubt about that. But, we had this blaze, these plywood arranged for quite some time. We arranged some with quantum computing. We arranged some with meme coins. We arranged some with MicroStrategy. We arranged some even with good companies like Palantir. We arranged some all across the board. And so, by sort of arranging that plywood and stacking it high and making sure the room was super dry and there was lots of matches lying around, nobody should be surprised that there's a fire. Nevertheless, the news has to do something and the market has to do something, and that's fine. And a little panic can be very healthy. So, here we are. And again, the mission remains the same. Buy good stocks, short bad ones, and you will win. And I think we're winning. Do you feel like you're winning? Oh yeah, you guys can guess where I am at. So yeah, we'll log into the 30K account in a second. I've lost my password, so I have to go download Thinkorswim and all that, and I have to pretty nice opportunity actually to short INQ and D-Wave and Rigetti, so I really do want to log into that account. Our NVIDIA rebounded a little bit. So we bought that at 93 on Friday. And we even bought HIMS. So I might want to sell out of those and short